What is the real reason the markets are crashing? Over the last 2 months, the S&P 500 and crypto have erased a combined $5.5 trillion. We have just witnessed one of the most sudden shifts in sentiment since COVID in 2020. But what's happening? Let me explain. Let's begin with a timeline. Markets have known the trade war has been coming since 2024. In December, the tariff threats ramped up and we saw many all-time highs in the indexes, especially the S&P 500. Even after the trade war began on February 1st, we saw even more all-time highs. Since February 20th, the S&P 500 has erased a whopping $4.5 trillion. That's $350 billion per day over the last 13 days straight. The Nasdaq is now just 8% away from entering a bear market for the first time since 2022. So what changed so quickly? In my opinion, the trade war is simply a scapegoat. The real reason behind the market's decline is a sudden shift in risk appetite. We have gone from extreme greed to extreme fear in just a matter of days. Positioning was so polarized that we have swung in the complete opposite direction. Where it gets even more interesting, though, is that institutional capital exited right before the decline in tech stocks. Believe it or not, heading into 2025, hedge fund exposure to the Magnificent Seven stocks actually plunged to a 22-month low. Take a look at this divergence between the Nasdaq and fund of positioning. How about this? On February 9th, institutional investors built the largest Ethereum short position in history. And this came, interestingly enough, as US retail investors piled into crypto on the thought and idea of a US strategic Bitcoin reserve. Crypto is now down almost $1 trillion since almost all of the bullish Trump promises actually came to fruition. The entire crypto market is even more supportive of my thesis. Take a look at all of the bullish crypto developments that have taken place over the last 2 months. Even the US strategic Bitcoin reserve came a sell the news event. So what changed? Clearly a sudden change in risk appetite. In December of 2024, sentiment was so bullish that Apollo published their risks in 2025 with actually a 0% chance of recession. Meanwhile, they saw a 90% chance of tariffs coming in 2025. Markets have known about the tariffs for months, so the decline is not entirely due to tariffs. The fear and greed indices in both crypto and the stock market have actually hit their lowest point since the bear market of 2022 this month. Last year, crypto actually saw bullish levels of extreme greed as high as 92 plus, which is the complete polar opposite of the 17 we're seeing now. Sentiment is the ultimate driver of any market, regardless of fundamentals. When sentiment shifts so quickly, outflows tend to hit record highs and cause flash crashes, as we have just seen. In the last week of February, crypto funds actually posted a $2.6 billion outflow for the week. This is about $500 million above the previous record set in 2024. And last week, the US small cap funds actually saw $3.5 billion worth of outflows, and this is the most since December 18th. Mid-cap funds saw outflows of $2.1 billion. Sectoral funds saw $4.5 billion of outflows, which includes about $1.9 billion from technology. Once again, a shift in positioning. And this means getting ahead of these shifts in sentiment will be the most profitable strategy going through 2025. And as the VIX, the volatility index, surges well over 70% in 1 month, the swings are just going to broaden. We expect to see 1,000 plus point swings in the Dow, and that becoming a regular occurrence. Lastly, The moves in crypto and stocks are becoming increasingly one-sided. Red days are deep red days, and vice versa. Yet another sign of changing risk appetite. Sentiment is always the ultimate driver of price. Make sure you smash that subscribe button, hit like on this video for real-time analysis of what's going on in the market as this continues to develop.